Before anyone knew exactly what the summer of 2019 would bring, BlackRock had already predicted the financial and monetary response to the pandemic. They saw it coming before it hit, and they benefited from it.
In spite of a volatile quarter, BlackRock is celebrating a more than 20% increase in assets and record high revenues. This chart shows net inflows of $75.31 billion, with assets being just shy of $10 trillion. To give a sense of the scope, BlackRock's assets amount to 50 times more than the fortunes of Jeff Bezos and Elon Musk.
And as BlackRock buys up America's homes for top dollar rent, almost 20% of U.S. households lost their entire savings during COVID. Almost a third of those making less than $50,000 annually, which had devastating impacts on Black and Latino households.
The Daily Poster highlighted the stark disparity between headlines, but more broadly, it shows how different classes have experienced the pandemic. So yeah, it's been pretty good for BlackRock. And while 1 in 5 people, lost what savings they had, and we know that heading into the pandemic, almost half of Americans had no significant savings.
One of the first people to issue such letters was BlackRock's CEO, Larry Fink, this year. If you read between the lines, you may have a glimpse of what is in the cards, or rather, what BlackRock has planned for us. Larry's annual letter to investors isn't the same as the one he sends CEOs. For some context, BlackRock is a massive shareholder of the world's largest corporations. So in his letter to CEOs, Larry essentially tells them what they should be doing. Ironically, this letter to CEOs hasn't been released this year yet. His letter to investors, though a tad different, it does give some priorities and strategies that the firms at BlackRock have for their individual and institutional customers. One whole part of Larry's letter is entitled Time to Rethink Retirement. It really makes you pause. In fact, many countries are raising the retirement age because governments are running out of money to fund pensions. Why? There just aren't enough taxpayers anymore. That is what they call a population implosion. This was one of the stimuli that inspired him to build BlackRock, to enable people to retire more comfortably.
Leaders in every country, whether it's a developed country or a developing country, are focusing on how do we prepare our citizens. And more importantly, in the countries that have small but growing capital markets, they see the power of the U.S. capital market. They see the power of our capitalism. And they are trying to develop a retirement system that will then fund their capital markets and grow their capital markets.
Let's just explain, though, when you talk about capital markets, compounded since the S&P was created, 1957, it has returned annualized returns of 10.26% every. I mean, that's amazing. So is that what you are saying has to be done now?
We need to be focusing on the long term. That's why
But from a granular standpoint, just from a company standpoint, because we work for companies and that's how we save retirements. How do they do it? I mean, are you saying ditching the 401k?
No.
And going for a defined benefit? I mean, should we go back there?
No, by no means. First of all, I don't have any policy suggestions. What I'm suggesting is we need to have a conversation. As I said earlier, I'm an optimist. I'm an optimist because we solve problems. We read papers, we watch news, and it's generally filled with negativity. And it scares us. And the whole issue of hope and fear, there's more fear in the world.
His response? Putting money into capital markets. He noted it's the only way people can fund retirement these days. For the uninitiated, capital markets are where financial instruments, all those fancy names that describe things like stocks and bonds and private investments, are bought and sold. And BlackRock has become super active in all of them, even buying up single-family homes to rent out. This, of course, has raised concerns about housing affordability, but that's a topic for another day. His point is strong in the sense that strong capital markets have been the reason the United States economy has kept growing since the 2008 recession. And just for extra fun, Larry was partially involved in developing mortgage-backed securities, the financial products that played a large role in that very recession. Looking back, it's not all that surprising. Larry studied political science and has an MBA, but he's not exactly a markets guy. His big takeaway? A strong banking system isn't enough for economic growth. You need strong capital markets too. And apparently governments around the world are starting to notice. In fact, Larry reveals that he's been in talks with policymakers and even heads of state across 17 countries. They're all eager to grow their capital markets. And of course, BlackRock is right there, offering a helping hand. But here's where it gets a bit unsettling. Larry mentions that Indian officials aren't thrilled that many Indians store their wealth in gold. They want that money in banks, and Larry naturally would prefer it in BlackRock's hands. He also notes that investing in gold doesn't benefit the Indian economy as much as their stock market does. So don't be surprised if you see restrictions on gold popping up in places where BlackRock has influence. So what's BlackRock's endgame? According to Larry, investing in capital markets isn't just ideal, it's necessary. Why? For two big reasons. First, it's the only way to fund retirements. And second, it's essential for building out ESG-compliant infrastructure. ESG, environmental, social, and governance, is an ideology pushed by asset managers like BlackRock, with the goal of achieving the UN's Sustainable Development Goals, SDGs, by 2030. And that's why you keep seeing the year 2030 everywhere. But back to the letter. In the third part, Larry asks a big question. How are people supposed to afford retirement when they're living longer? The answer, it seems, is to invest in BlackRock. He points out that BlackRock has a joint venture with an Indian retirement firm, which is investing in digital infrastructure. Translation, you'll own nothing, be happy, and your savings will be helping BlackRock shape the future, or control it.
Well, you've got a plan called Life Path Paycheck.
Yeah.
Now, talk about this. Explain what it is. This is iShares as well.
It is for a 401k or the defined contribution plans. A 401k plan, when you retire, generally you get a 100% of your savings in a lump sum, and you reinvest that lump sum. But most people don't even know what to do with it, and people are frightened about are they going to outlive their savings?
And they might.
And they may, but the more you invest during your working age, the sooner you put some money away during your working age, getting back to your S&P compounding, the higher probability you're going to have a pool of assets, pool of money, that you're going to be able to live with dignity and hope during your retirement age. What Life Path Paycheck is using the same formula of this target date plan, where the early years you have majority of your 401k or in equities.
Well, you said 99%.
And then over time it goes more into fixed income.
It's like a 529 college savings plan.
Exactly. So it narrows and narrows the risk. But what we do, we add an annuity to the back end, whereby we could then define to you how much is your monthly paycheck.
Larry also admits that younger generations are financially struggling because of policies introduced by boomers like himself. Yet again, BlackRock has a solution. America's Social Security system is expected to run out of money by 2034, so Larry suggests two things: raise the retirement age and make workers invest a portion of their paycheck into capital markets. In fact, starting next year, a law will require U.S. employers to automatically enroll employees into 401k plans. And that's just the beginning. If all this talk about controlling your money wasn't enough, Larry also hints that BlackRock wants a say in how you spend your retirement savings. While this is currently just a product offering, the fear is that it could one day be mandated. After all, if too many boomers start cashing out, capital markets could be in trouble. So what does all this mean? According to Larry, we're on the brink of a revolution in retirement. But let's be honest, it's starting to sound more like the Russian Revolution than the French one. Larry seems to think BlackRock's grand plan is going to bring hope, not fear. Are you feeling hopeful yet? Well, buckle up, because there's more. In his letter, Larry hinted that one way to fix our financial future was to solve the demographic problem. Basically, either have more kids or boost immigration. But no, what he actually said was to just raise the retirement age. That's it. Maybe it has something to do with his belief that machines will replace humans. He literally said that at a panel hosted by the World Economic Forum, and we'll leave a link to that if you want to check it out for yourself. According to him, countries with declining populations will find it easier to substitute machines for humans. It almost feels like declining populations are exactly what BlackRock wants. After all, fewer people mean fewer emissions, right? Super ESG friendly. If you're not on board with that idea, Larry doesn't seem to get why. In his letter, he says, There's so much anger and division, and I often struggle to understand it. I don't suppose he's looked in the mirror lately. Moving on, in his letter's fourth section, Larry talks about BlackRock's vision for ESG-compliant infrastructure, which they want to build using your retirement savings. He kicks it off by declaring that the future of infrastructure lies in public-private partnerships. Essentially, BlackRock teaming up with governments. According to Larry, this is the only way to fund infrastructure since governments are too deep in debt to handle it alone. He even points out how U.S. debt is growing rapidly and fewer governments are buying U.S. government debt. In fact, lack of funding is why the Millennium Development Goals, MDGs, failed. Larry stresses that more leaders need to focus on America's snowballing debt, warning that we could end up like Japan in the 90s, with debt outpacing GDP, leading to austerity and stagnation.
You know, if there is another crisis coming down the pike, which it seems there is, BlackRock is likely to do essentially the same thing, whatever policy they help design. And it really should be a point of public discussion why BlackRock has so much influence over what the Treasury Department does or what the Federal Reserve does. And really, you know, as far as U.S. COVID fiscal policy is concerned, which, by the way, even though that was started under Trump, a lot of this continued through into the Biden administration, who, again, Biden's top economic people are former BlackRock executives. You know, why is this particular asset manager on Wall Street so embedded with the development of U.S. fiscal policy, which at times when that fiscal policy is meant to help regular Americans, it has not been doing that when BlackRock is involved. And really, this is something that most Americans don't even know happened.
But don't worry. According to BlackRock, this doom and gloom isn't inevitable. There's a third way to reduce debt. Growth. Yes, growth. Larry says if the U.S. economy grows fast enough, we'll be able to repay the debt, conveniently ignoring the fact that such rapid growth would fuel inflation. And how does Larry think we'll achieve this miracle growth? By investing in energy, more specifically, unreliable energy, because it's the most ESG-friendly, of course. Underinvestment in reliable energy due to ESG is partly why everything is getting more expensive. BlackRock has been one of the main players driving this underinvestment. But now Larry concedes, yeah, oil and gas will be needed for a number of years. Understatement of the century, given that 50% of global energy production comes from oil and gas. And then Larry brings up Germany as an example of a country doing energy policy right. Yes, the same Germany that shut down its last nuclear power plant while its economy struggled with sky-high energy costs. Not exactly a shining example of success.
But here's where I didn't see in your letter, why don't you just say, we need some nuclear power?
Well, that's one of the answers.
So would you be in favor of more nuclear
small
power?
nuclear reactors, absolutely, but that's one of many solutions. We need to be upgrading our infrastructure. Most countries need to build their technology and their infrastructure. If you think about the macro trends are, and I talk about that, is deficits are becoming very cumbersome. Governments are going to need to rethink how they finance infrastructure. There's huge pools of money in the private hands, so we need to be, in most countries, they privatized airports. And the performance of most airports outside the United States are stronger than.
And what about Texas? Larry says the state faces challenges around energy, implying that rising demand is the issue, rather than Texas's increasing reliance on intermittent energy sources. And guess what? BlackRock's investing to accelerate that transition, of course. But don't worry, Larry assures us they're still investing more in reliable energy because, well, that's what BlackRock's clients want. Some institutions even threatened to divest due to BlackRock's ESG stance, and a few actually did. That's just scratching the surface of the hypocrisy here. Larry also claims that green energy makes countries less dependent on foreign powers, which couldn't be further from the truth. China produces 90% of the materials needed for green energy sources, so the idea that green energy grids make us less reliant on foreign powers is, well, absurd. Makes you wonder who's really pulling the strings over at BlackRock, huh?
Yeah, so I think a lot of the powers that are affecting sort of this natural capital agenda right now are inherently predatory institutions. And so I think their interest is in exploiting, which has been historically what has happened to Latin America in the colonial and post-colonial era. And I think this perhaps may be a more creative way of dressing up the same game to make it look different.
What is the game?
Well, I think what the goal here is to sort of financialize and monetize what previously have been the global commons. So, for example, there was this effort that was spearheaded by a Rockefeller Foundation connected group called the Intrinsic Exchange Group. They partnered with the New York Stock Exchange to create this new asset class and asset vehicle called the Natural Asset Corporation. And basically how these NACs are said to work, at least as far as the architects of it have said, is that, this group goes and identifies a natural asset that nobody owns, and then they sort of have an ICO and sell shares in that, and then work on generating profit, for their shareholders.
In the next part of his letter, Larry talks about how BlackRock is transforming itself. They're teaming up with Global Infrastructure Partners, GIP, a firm that Larry seems to have personal ties to. He also plans to visit more countries, meeting with leaders to convince them that BlackRock's game plan is the way to go. It seems like BlackRock's recent surge in assets came from these foreign sources, thanks to Larry's lobbying efforts. To put things into perspective, BlackRock manages over $1 trillion in assets. That would make it the third largest country by GDP. They have enough voting shares to influence almost half of the US stock market. Larry hints that BlackRock is continuing to focus on ESG and investing in early-stage ventures. Fun fact, BlackRock invested in the failed crypto exchange FTX, and they're also a major player in Bitcoin mining companies. Here's where things get really interesting. Larry mentions that the de-risking of client portfolios is creating tremendous opportunities. In 2023, he noted that investors were de-risking, which suggests BlackRock believes the markets are going up. Pretty convenient when you can advise the companies you invest in, huh? Larry wraps things up by saying BlackRock is just one small part of a global success story. He paints a rosy picture of how BlackRock is lifting the average person, but we all know who's really benefiting. The top 10% who own over 93% of all stocks. Oops, Larry forgot to mention that. So what does this all mean for you in the markets? Well, BlackRock's leadership seems completely out of touch with reality, which is scary considering how much money they control. Following Germany's energy policies? That's either incredibly naive or downright sinister. The rich will get richer, and the poor? Well, not so much.
And but I think also that has a lot of causes a lot of complications when it relates to the ethos of Bitcoin, which was originally about stopping irresponsible central bank policy and fiscal policy. The idea that you would yoke Bitcoin to the US dollar instead of using it to challenge the US dollar or challenge fiat or challenge debt-based currency or a debt-based monetary system. Obviously, if you join, the US dollar to Bitcoin, having Bitcoin be a challenge to those things essentially kind of has to stop. And really in that situation, you could have Bitcoin enable that type of irresponsible fiscal policy because you would essentially be using it as a sink for hyperinflation.
This is what happens when you push for centralized control and ESG policies under the guise of solving problems. It feels less like a plan for prosperity and more like a desperate attempt to keep a financial Ponzi scheme from collapsing. How do you think life will look like for us in 5 years? Let us know in the comments.